going on, everybody? Welcome back to the channel today. Doing a little deep dive today into our multifamily property. Really just want to talk about multifamily for whether you're a beginner, whether you're seasoned. I think, it was a pretty interesting story and share that with you guys that's looking to get ready to start real estate. Maybe you're in single families and you're interested and get into multifamilies. And so I'm going to kind of share my journey, share a little bit about the property, the details, the investors, how we structured our deal, the situation, because every situation is unique. But make sure you guys subscribe to the channel. Drop comments in the below the video and share different things. You've got questions about the deal, any areas or topics within real estate you think would be worthwhile for me to shoot a video on. That'll be great. Give me some ideas. But really, so we bought an 18 unit back in June of 2020, right in the middle of the pandemic, and a lot of lessons learned, and just a lot of growth that took place as a real estate investor. But the number one, for me, always been doing have been doing single family renovations, investing for really since all the 2010s. From buying foreclosures to live in, and then just growing to actually purposely buying investment properties, and had bought houses. We're doing the middle of renovations in 2019 on the back end of being displaced for 6 months after Hurricane Michael in Panama City, Florida. And so we had just moved back into the house in March, had started getting deals under contract, and we were doing deals, and boom, one May tore my ACL at PT. And it sucked. We had just closed on a house and had two other ones under contract. And now boom, here I tore my ACL. I went on and had surgery at the end of that month. So with me, I'm always big on professional development, networking. Hadn't always been, but I started doing more networking, especially on the real estate side. And so I hadn't been to any seminars or events. So fast forward, after getting out of physical therapy, rehab, and all the time, October of 2019, it was able to travel. So I found Jake and Gino, a multifamily event down in Orlando, Florida, and we went. Took the family a little vacation. They can hang out, do their thing during the day, and then I, go there and learn about multifamily. It was apartment investing, and just going through that event, was able to meet a mentor from afar, Eric Thomas, motivational speaker, and and it just really showed me how close I was to multifamily investing. I didn't move forward with the training package. I'm not going to talk about that. They got a training program. It was a little bit more expensive than what I wanted to pay, and but I learned a lot. I learned a heck of a lot. Met some good people, and so my goal leaving that conference was, hey, I'm gonna do a multifamily in a year, and lo and behold, 45 days later, I had I didn't have a contract, but I submitted a letter of intent. A little different than on a single family side. You put an offer with a contract, but with commercial real estate, you submit a letter of intent usually and just kind of lay out the terms of the agreement, and you kind of do a little back and forth, and then from there, once everybody agrees, boom, you can go and put it into a contract, or the commercial side, a PSA, purchase sales agreement. So did that at the beginning of December. The broker was a little hard to get in touch with, and she got back in touch with me, presented the offer a little bit low. So the story behind the deal, the listing, it had been on the market for over 90 days. It was listed for 1.35 million, and I came in with an offer after I did my analysis. It was like, hey, I'll offer you $1 million for it. That was conservative. I knew, hey, if you need to do a little work here and there, we can make that work. And so put in an offer for $1 million. I tell you, I talked to my wife, she was like, hey, how do you feel? You just sent that offer, your first $1 million offer on a property. And it felt good, but it felt scary at the same time because it was uncharted territory. This was our first apartment deal. So fast forward to January of 2020. I walked the property, so I got opportunity, met the broker on site. It was actually raining a little bit, and she got out of her car, and we were going, and she had the keys. We went door to door, knocking on the door, and kind of under the disguise of, hey, with the property insurance, because they still had an insurance claim going on from Hurricane Michael. And didn't want to spook the tenants to let them know, hey, somebody was looking at buying. They had it on the market for sale, and just some of the subtleties that come with that. So, but it was good. And as walking through, it was like, hey, 10 of the units had already been turned over. Four were down. Still working with the insurance company to get those renovated. And then there was another four that didn't get major damage. All the roofs had been replaced, but that didn't have any damage on the inside. So we had original cabinets, carpet, and everything for those four. But overall, not bad. They were four quadruplexes and then one two-story duplex, kind of laid out, and it was good. It had some issues. There was when I pulled up, I saw his water main was leaking, and that was something that we had to have fixed. I was like, okay, they got the water main leaking, and it's been halfway updated. You got one quadruplex that's down, and so talking to the sellers, didn't talk to them in person, but come to find out was some issues they had going on. They were self-managing. One was the motivation. They were dealing with an insurance claim, which was a motivating factor. They both had other businesses in town, so this wasn't their primary focus, and they were close to retirement age. So all those things kind of worked together to allow us to come together and kind of settle on a price. And it took it was that the anticipation. I kept following up, yeah, they're still looking over your offer. It's hard to get both of them together. And then eventually, March 8th, we got it under contract. We agreed. We split the difference, came in. They wanted to hey, we want to be at 1.1. We ended up selling at $1,050,000. And we went under contract. But, when you go under contract with a commercial building, that's just the beginning. Usually you have 60 days to close. You have your due diligence going on. Where you got 2-3 weeks. They have to give you financials. They have to give you any reports, surveys that they have, anything that kind of talks about the expenses, any contracts that they have with vendors, where you can assess and underwrite all of those things. And so it took about an extra week. That was something we wrote in our contract. The due diligence period didn't start until we received everything we needed. And it was in the middle of COVID. March, COVID was picking up. It was like, hey, this thing is for real with COVID. The virus is spreading. It was like, wow, okay. And I talked to my lender, and he was like, hey, far as we're concerned, we're good. We're still lending. And so we were moving forward, survey, home inspection, and appraisal had to happen. And, going through all those things that you have to when you go. And we ended up working out a pretty sweet deal. Whereas that the appraisal came in at $1.224 million, and we were buying at $1,050,000. So from off the jump, and we got $25,000 back at closing for incidentals, just with taking over an insurance claim. So we netted, from day one when we closed, we were up $200K equity from day one, instant equity. And it appraised for $1.34 million. Once the renovations are done, that cash flow is added to the bottom line. And what our new net operating income would be when we execute our business plan, we have $1.34 million appraisal, which was outstanding. So we were going through the deal. We had to wait. It took them till May to get the water main fixed out front. That was a $31,000 bill they had to pay. And we eventually got there, settled in June, closed June 26, 2020 on it. And so we bought it for $1,050,000. They paid for the water main to be fixed. They gave us $25,000 back at closing for incidentals. We took over the insurance claim, which the insurance is going to pay for the rebuilding of those 4 units. And we're still working through that right now. Finally, we're coming up on a year in June, but we'll get about 50-60,000 at least to rebuild those 4 units, which would be more than enough money with our crews to come in and take care of that. The closing cost on the deal was $12,400, not a lot. We went with a local credit union. We had a really, really great loan product. We ended up getting a 25-year amortization, 4% interest rate. We had to put 20% down, and it was a 5-1 ARM. So it adjusts to base prime rate plus 3/4 a point every 5 years for 15 years, which is a pretty cool loan product. So our monthly payment is $5,900. So $5,900, about $4,600 of that is the principal and interest payment, and then insurance about 800, and then our taxes about 500 a month, so 5,900. And we had to pay $5,000 for an SEC attorney, so with security. So we'll talk about the money raised piece a little bit, and that was kind of the deal. So, and we had it was fully occupied with the exception of the 4 units that were down. And so overall, it cash flowed from day one that we were well over what we needed to cover our debt service or our mortgage. We call it debt service in the commercial space. But going into it, we got the insurance claim, and boom. And I made the decision to manage this property personally as we were going through, and I knew I was leaving in November of 2020, relocating out of the Panama City, Florida area. And I was like, hey, I'm going to be the property manager. Looking back on it now, it was experience, just to be able to impact people and talk to the tenants one-on-one. I'm come from humble beginnings. I remember when we lived in our apartment for about a year before we moved into our house. And, so it was cool to be in a position to help others. We partnered up with the Panama City Housing Authority. We helped a couple single mothers that couldn't find a place, moving from, one was from upstate New York that had a child, and she was like, she couldn't find a decent place to live that was clean. And so it was pretty cool to be able to help somebody and to see somebody who was so grateful to have a place to live and to offer that ability was really moving, which is why we do real estate, is because we can, you can have a positive impact on people and have a positive impact on the community by taking these properties, investing the capital into them, and running them real professional. And that way, we treat our residents like gold, because they are gold, because they're the reason that we're able to keep these properties going. And so that's been cool to really to help people on that front. And so we'll talk about the investors. So I didn't talk about the investors. Go back to that piece. So we had to put 20% down. So 210,000 you had to bring to the table, and I ended up raising 95,000. So a little bit less than half of that. I raised that capital. I brought on 5 investors, and we raised the 95K across them. And so what I ended up doing, I did one of the guys I brought on as a general partner, and he got a share, and then one of my friends that contributed to the deal, he got a share of ownership as well too. And for the other investors, we did a 2-year note. They got an 8% return on their money, paid out quarterly, and a $20,000 bonus once we do a refinance at the 2-year mark or a little bit before the 2-year mark. Whereas that it worked out that they have a 17% internal rate of return, 17% IRR per year on their money, which is pretty good. And it worked out well, and we're in the middle of that, coming up on a year of ownership for the apartment. It was a little bit atypical. I met an attorney when I was at that Jake and Gino event, and and I read her book, and it said, hey, you can raise money and have a second position lien versus giving out the equity to the investors. And so that's what I ended up doing. I didn't know any better. It was my first deal, and it worked out well, where we ended up with the equity, and we gave them a nice return on their money, their capital, in the second position. And and now we're executing. And I can shoot more videos about that, going through our first eviction and dealing with that process. And it's been a journey, but it's all been worth it, because being able to help people and being able to impact the lives of others is always the piece of it. With real estate, you can have a positive impact, and it's just a tool. And it's all about, you can use the tool for good, or you can use the tool for bad. But so that's the deal. That's the deal at Panama City with the 18 unit that we purchased last year, and we're actively looking for more multifamily deals in the Panama City area, but then also in other emerging markets with high growth. The Carolinas are definitely one of those markets. Huntsville, Alabama is a market we're looking in actively. Richmond, Virginia, then Hampton Roads, Virginia as well too. That we're actively looking for deals, and continuing to grow our base and partner with other investors that's looking to grow, whether it's their self-directed IRA accounts, or they just got money in the bank that they're looking to invest, or whatever it may be, that just using us as a tool and partnering and where the situation works, where is that they can diversify their portfolio and have cash flowing apartment, cash flowing assets that's part of their portfolio by investing and in this asset class. So, and it works out well. It's a win-win. Our investors, they're part of our team. They're an intricate part of our business, and we're just looking for great things in 2021. We're looking to do 2 multifamily deals later this year. And I just wanted to come by and just share with you guys. I know I talk a lot about my single family business with the single family renovations that we have going on, but I just wanted to share the apartment deal and then start sharing more on the multifamily side as well too. So I know this was a little bit long, but we kind of want to walk you guys through the different pieces of the deal with the apartment building that we did there. For any beginners that's looking at how the deals are structured, we kind of can go through that. Then talk about the underwriting at all. And there's just the property management piece is a big piece of it as well. But really want to just shoot this to share and encourage you guys. Shout out to the one member. I had somebody in one of my groups that asked me about the 18 year. I was like, yeah, I hadn't even shot a video. So that gave me the inspiration to do this and share this with you guys. And then drop the comments below. If you got to this part of the video, kudos to you. Let me know what you're looking for. What are you guys? What are you investing in? What are you thinking about trying to invest in? What hurdles or barriers you guys are facing to kind of get the ball rolling and take action and see, if I or somebody I may know be able to kind of help you guys get over the hump. And like always, make sure you hit the thumbs up, share the video, and make sure you subscribe to the channel. And I will see you guys on the next one.